To discuss, we're now joined to discuss further. We're joined by Lesiba Mothatha from Investment Solutions. Thank you for joining us, Lesiba. So months ago, everybody was talking about the spectre of inflation, and there seemed to be a real fear. We did see it go through 6%, which is the bank's ceiling, but has it all calmed down now?
Well, the headline number shows that it's going down to 5.9%, which is an unchanged position from last month. But that's really still at the upper end of the inflation target at 6%. What's concerning is the core inflation. So if you strip out food, you strip out volatile matters like energy, you'll find that inflation actually is going up. And that suggests that it's taken root in the economy. The investors and the populace at large will believe that inflation is going to remain high for a long time, and that will fulfill itself eventually.
Because they make decisions based on that.
Of historic numbers. So where we are now, inflation is uncomfortably high.
Okay, so still an underlying concern. And what does that mean for interest rates tomorrow?
So Lesiba Mothatha is the new governor. He comes in and he actually has put a hat of being a hawkish governor.
Like he's dying to raise interest rates. Is that true?
Indeed. He had written this in his speech about a month ago to discuss that the imbalances in the economy. You find that the rand, the currency, is meant to be a shock absorber. When it depreciates, it should actually be absorbing and cushioning us also from inflation. But what we had found is that persistent rand weakness has come through into inflation numbers. That core number that I discussed is driven by a depreciating currency. For that reason, it's left inflation at an uncomfortable high level. Even when GDP is so weak, I expect them to hike interest rates tomorrow when they meet. One, to ascertain credibility as a bank, to say that they're an inflation hawk. Okay. He's a new guy, and I think he wants to put that on the table, that I will let inflation to be anchored. Now it's at 6%. It's anchored at the high level. It used to be at 4.5%. So we need to get that inflation lower in a sustainable way, because if you've got low inflation, it feeds through to investments. Planning becomes easier in the economy. In the long term, it's good for economic growth.
Do you, 25 basis points, 0.5%, what are we looking at?
25 basis points.
Okay.
Just in consideration of where we are in terms of the economy, the weakness that we find ourselves in, that will require a moderate hike.
So just a little tweak, but that still hurts consumers who are so indebted. I guess that's on his mind, but like you say, it's a balance, and action perhaps has to be taken.
Well, it's interesting what he said. He had said that this fear that higher interest rates will hurt consumers is probably exaggerated.
Interesting.
So it's this unsecured debt that consumers get to take, and they've been lumped with a lot of it. It's actually on fixed rates. So if nominal rates are going up and down, it doesn't really affect that. The bulk of the population in mortgages, etc., their financial health, yes, has deteriorated, but it's not to a point where they cannot withstand some tightening in policy. That
is so interesting. So we're looking at only hitting those people who can afford to have home loans, car loans, things like that. They're not the people who are struggling and maybe have a few loans out of desperation.
And that's the thing, to say that where we are now, you must remember, interest rates can help economic growth to a degree. But where we are now, we have real negative interest rates. If you put money in the bank, inflation will erode your savings. And that is unsustainable, in that it erodes investment and it has negative consequences for GDP. While theory suggests that lower interest rates will support growth, we actually believe where we are now, lower interest rates are inhibiting growth.
Wow.
So we need higher interest rates to equilibrate this mismatches we find in the current account, particularly in the currency market, and the challenges that we find on the fiscal space. You need to get that inflation lower. So if you have a target, at the midpoint of 4.5%, and inflation expectations are anchored along those lines, that is very supportive of growth. But where we are, it's anchored at the high end. Everyone believes that inflation will be at 6%.
Very, very interesting. And you spoke about the rand driving inflation because, of course, we import oil and we import a lot of things. I hope we can bring up a quick rand graph. And this is all dependent on what happens in the United States. So people are saying if the Fed tonight indicates that it may raise interest rates earlier than expected in the US, where could our rand go? And just explain that dynamic in layman's terms, if you can.
Right. So the rand is driven by many factors, and if you find that we're importing more than we export, we've got a current account deficit. Ours is burgeoned, and it has gone into an unsustainable level. We're
importing too much compared to what we export.
And we're not producing enough. And we're funding that imports or our financial situation from inflows from foreigners. So if they hike interest rates in the US, the channel is money can come out of emerging markets like us, South Africa, and that outflow of money, which is funding our current account deficit, will go into the US with higher yields over there, and that will leave our currency vulnerable because we've got twin deficits. We've got the fiscal deficit and we've got the current account deficit. A combination of those two leaves South Africa very vulnerable, and it leaves the rand very vulnerable, as you could see.
Well, the rand is already weak. We did strengthen yesterday. We were below 11 rand, but today back above 11 rand. People were talking a while ago about a shock to the rand, and it is pretty weak. Do you think it could go much weaker based on what we hear either tonight from the Fed or when that real action starts taking place next year?
Well, I think that the central bank here is very important in the message that they send. So should they not hike interest rates, that could be currency negative.
Okay.
If they hike interest rates, that will suggest that they are very hawkish, and that will anchor the rand not to depreciate quite significantly. As I explained, high interest rates are desired at this point in order to actually stimulate growth, which sounds counterintuitive, but that's the reality.
Yeah. But if they're higher in the US, people will go to the US rather than the South African rand.
But if you higher interest rates, it protects you from that shock. And the rand should actually be stabilizing, and it should actually overshoot and come back in that sense. The problem now is that when it's weak and it's persistently weak, if we put a chart of a trade-weighted rand, you'll see year on year it has been depreciating for quite a long time.
And still very quickly a risk to inflation, even though petrol prices, oil prices, everything that we do import going down.
On balance, the risk actually on the low side. With oil now at 79 barrels.
Yeah, we've got below 80, which it hasn't been for ages.
This is a good dividend for growth, particularly for emerging markets. It's also a good contribution to inflation going forward. At this point, we're seeing the rand has eroded some of this oil benefit that has come through, particularly in these numbers that we're talking about, the recent one at 5.9%. That rand weakness is still in there, but in time, on a base effect, you'll find that next year inflation will have to come down.
Well, we have to leave it there, but we are looking at apparently today, given the prices that we see a drop of 70 cents per litre in the petrol price next month, which I'm sure will be welcomed by many motorists. Thank you. That was Lesiba Mothatha from Investment Solutions. Let's look at the markets and remember that what you're seeing could perhaps change when the Fed Reserve in the US releases those minutes later tonight that may give a clearer view of where interest rates are going in America. It's widely expected that the US, that's seen better economic performance, will raise those rates around the middle of next year. If that timeline moves forward, the rand could weaken. The price of gold could drop because the US dollar will be the investment in vogue due to better yields. Let's look at the numbers. The JSE closing in the red. The all share down by 0.4%. Media and e-commerce giant Naspers fell by 3%, but PPC up today. Most of the retailers, telecoms and big banks closing lower. The gold miners pushed higher once more, adding more than 4%. The gold miners have been jumping up, but they're still significantly down due to losses earlier in the year, and concerns remain around marginal mines that are struggling to turn a profit at the current gold price. Meanwhile, the big miners have been weighing on the market. Anglo down by 2%, BHP by 1.5%. Let's look at the actual price of gold. It hit $1,200 an ounce earlier today, but it's dipped ahead of that meeting of the U.S. Fed Reserve, or in fact the minutes that we're waiting for. Meanwhile, crude oil has risen on speculation that the cartel of oil-producing countries, OPEC, may act to stop the fall, although a lot of debate about what will happen to the oil price. The rand firmed in earlier trade following the release of encouraging inflation data, but dipping slightly this afternoon as investors were waiting for those minutes from that meeting. After the break, tax dodging, mine safety, and the biggest, flashiest lit up billboard in the world.
GovTech is South Africa's premier ICT event hosted by SETA. Our theme for GovTech 2014 is a government empowered by technology. Our topics will explore e-government, infrastructure and broadband, reducing the cost of ICT and service delivery, best practice, innovation and success stories. Join us at the Durban ICC on 2nd to 5th November 2014. Register now on www.govtech.co.za.
Welcome back. The South African Revenue Service says its investigators have uncovered profit-shifting practices to the tune of 20 billion rand over the past 3 years. The taxman says this translates to a tax base erosion of about 5 billion rand over the same period. Profit-shifting is the movement of profits to lower tax havens by multinational companies. SARS has briefed Parliament